Do you remember the housing bubble and the following international crisis in 2008?
The worst day on Wall Street since the crash of 1987.
The Dow traders are standing there watching in amazement, and I don't blame them.
Now we live in even more stressful, desperate times. For the last couple of years, the boat of the world's economy is about to roll over. International geopolitical conflicts, overvaluation, properties, and rising interest rates. Those are three horsemen of the apocalypse. This has never happened before, so all three would exist simultaneously. Every investor, financial expert, and analytical agency is warning people about the biggest recession and crisis in history, especially in the housing market all around the world. But how are the banks involved? Is it really that bad for the investors? And what should you expect from 2023? To fully understand the real scope of the problem, we should look at the cradle of democracy and the most powerful economy in the world, the USA. In 2008, the housing prices dropped 33% across the country, and since that time, the market was slowly recovering, reaching the peak prices in May of 2022. At that moment, the average property price in the US was around $500,000. This tremendous overvaluation starts looking even worse when you factor in average disposable income. According to the recent data, in July, the home price-to-income ratio was peaking at 7.78. But in September of 2022, it has reached an all-time high of 9.5. Newly constructed homes are getting more and more expensive, but the income isn't growing that fast. Less and less people can afford buying new homes, so the developers have to lower prices. But that's the only beginning. The mortgage rate in banks is growing every year. In 2022, it reached over 5.89%, the highest since 2008. It means mortgages are getting more and more expensive, thus less people can afford them. If you combine that with continuously growing inflation fueled by geopolitical turbulence, you will get a ginormous bubble that's about to explode. Experts have calculated the housing prices need to drop down by roughly 15% to become fairish again. But if we analyze the plummeting prices in 2008, we will notice that they went down almost 14%. Then, until 2013, they were continuously decreasing almost 33% when compared to pre-bubble times. Today's situation is looking much more severe, and we can expect substantial drop in housing prices in the upcoming years. The situation on Chinese market is different in its core. For the past years, the Chinese economy was demonstrating the highest annual growth for about 6% each year. But if we look closely at the country's economy system, we'll see that almost 1/3 of its growth comes from real estate development. For years, the government has been inflating the real estate industry, forcing developers to build new properties. We also need to factor in the decreasing popularity growth, which is nearing zero. If we combine those two, we will see that the supply and demand balance is about to break. There are too many houses and not enough people to buy them. Additionally, the whole development industry is extremely shady. Developers have been selling pre-building apartments to people for years. Many Chinese citizens have already paid off their mortgage but have not received their property. Recently, China's biggest developer went under the declared bankruptcy. It seems like the Chinese economy is standing on the edge, ready to collapse at any moment, but the government may have found a way to deal with that problem. China is planning on issuing billions of dollars in loans to increase interest in real estate. Controlled demolition of unfinished buildings is an additional way to let go of past mistakes. And experts are positively about that. They are still predicting the continuous price decline in the following years though. To put things in a perspective, you should not wait for a momentary bursting of this housing bubble. The prices will slowly go down year after year, and mortgage interest will drop respectively. It would still take years for economy to adapt to the new reality of decreasing annual growth. In European Union and CIS countries, the situation is almost catastrophic. Just like in the US, the housing prices have been on the rise almost a decade. Developers were happy, governments were happy, people were tolerable. Since 2010, the cost of buying a home was rising by almost 45%. Inflation was roughly stable and the income was growing steadily. People's budgets were stretched, but everything seemed okay. But the recent events in Ukraine have changed everything. Thousands of refugees have come to Europe. Thousands of flats were taken off the market to accommodate for the spiked demand. Rent prices in all major European cities have skyrocketed. The inflation came shortly after, being a side outcome of Europe's extensive financial and military military assistance. It caught everyone off guard. All prices went up, which in combination with already gigantic overvaluation created a truly horrendous situation. Don't forget about the increasing mortgage interest rate, which is similar to the one in the USA, at around 6%. The situation in Europe is like in the US but worse. Inflation, war, overvaluation, rising mortgage interests, a recipe for disaster. In CIS countries, the housing market is even worse. Russia's mobilization has crippled the economy, and over 1 million capable people have fled the country in September alone. Ukraine is in a constant fight. Cities are suffering from bombing, and people have nowhere to go, so buying properties isn't a primary focus. Other CIS countries are also struggling to find place for all people fleeing Russia, running from mobilization. Rent prices in Kazakhstan, Belarus, Georgia have skyrocketed. The CIS will soon cease to exist. Housing market in Europe and CIS will recover after the war is over, but we cannot make any predictions when that's gonna happen. So what does all that means to an average person? Well, I'm not an expert, but all the signs point towards stopping looking for houses to buy. Purchasing houses at the historical maximums right before the greatest recession of the 21st century is a very, very bad decision. The prices for a movable property will continue plummet, and the inflation will keep rising, so less people will be willing to sell their properties. But if you wait just a little longer, at least a year from now, you will be able to save significant amounts of cash. All you should do now is preserve your existing money, multiplying it enough rate to outperform inflation. And wait, patience is the word of the day. What do you think? Are we nearing the next crisis in the housing market? How did housing prices in your region change in recent months? Type your opinions, predictions, and thoughts in the comments down below. Subscribe to Beside Hustle to always be up to date on world's economic situation. Like this video if you learned something new. See you in the next one. Bye.